Hello everyone. Today we're going to have a brief market recap, then talk about the US oil inventories, the Brexit vote in Parliament, and the Reserve Bank of New Zealand meeting. Then I'll run through today's trading ideas. This is Marshall Gittler, head of investment research here at FXPRIMUS, bringing you my morning comment. Well, the dollar recovered yesterday with no particular impetus as far as I could see. On the contrary, the US data that was out yesterday was really nothing to get excited about. The main point of interest in the FX market yesterday, or in the last 24 hours, was the stunning recovery in sterling. The pound was weaker in early European trading, but ended the day actually as the strongest major currency after Bank of England Monetary Policy Committee member Kristen Forbes suggested she might vote for a rate increase if the UK economy continues to perform as well as it has recently. And oil prices collapsed overnight after the American Petroleum Institute reported a stunning 14.2 million barrel increase in inventories. That was far above the 2.5 million that was expected. As for today, there's not that much on the schedule. Canadian housing starts are expected to be down slightly, coming after yesterday's disappointing building permit figures that could send the Canadian dollar down even further. As I mentioned, U.S. oil inventories were expected to be up 2.5 million barrels, the fifth consecutive week of increase, but after the API reported that enormous increase, I'm not sure whether anyone cares what the consensus forecast is or was anymore. Now at 15:30 GMT, the UK Parliament votes on the draft law authorizing Prime Minister May to start the Brexit process. It's a foregone conclusion that they'll approve the bill, but I think it still could have a psychological impact on the market. Then overnight in New Zealand time, the Reserve Bank of New Zealand, the RBNZ, meets. The market puts zero probability on a rate hike today. Now, the RBNZ faces a kind of a policy conundrum. Inflation finally returned to be within its target band recently for the first time in 2 years. But unemployment's rising, the currency is stronger than expected, wage growth is low, and the housing market's cooling. Now, while the market expects a rate hike eventually, I think that at this stage, the RBNZ is likely to take a more cautious tone that could depress the New Zealand dollar for now. Finally, overnight, Japan machinery orders are expected to be up on a month-on-month basis. That could be positive for the yen. As for today's trading ideas, first off, I think oil could fall further. There's clearly an oversupply of oil in the US, and the number of drilling rigs just keeps on increasing. That suggests the glut will only get worse in coming months. I expect oil prices to fall further. Secondly, I expect some mean reversion in sterling. Yesterday's comment by Forbes was really nothing new from her. She's always been hawkish. She's one of the two hawkish members of the MPC. Now, I think as the shock of her comments fades today and the focus turns to this afternoon's Brexit vote in Parliament, people are likely to use the higher sterling to establish new shorts. And sterling may weaken as a result. Finally, as I said, I expect the RBNZ to take a more cautious tone at today's meeting and for the Kiwi to weaken as a result. The RBNZ last referred to the currency in its statement in November, and since then it's strengthened further. I expect them to push back against the FX market and for the Kiwi to weaken as a result. This is Marshall Gittler, head of investment research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.